Hi, I'm Stuart Elliott from S&P Global Platts. I'm catching up now with Aaron Gill, Vice President of Maritime Sales at Genscape. Aaron, nice to see you.
Morning.
Could you tell us a little bit about what you see the potential impact of pricing changes to LNG trading from oil index pricing to gas index trading?
Sure. Well, I think in the LNG space, we're seeing a lot of interesting things happening both on the pricing and the trading side. If you look at how LNG has traditionally been priced, it's been priced off of crude indices. The Japanese crude cocktail being the key one, used to price mostly Asian LNG cargoes in the 70s, since the 70s. You look at European imports, they've been priced off of Brent or gas oil or fuel oil or other of these oil benchmarks. And that worked perfectly fine when the market was dominated by long-term contracts tending to go from point A to point B. What we're seeing recently is the divergence in the price between gas and oil and the need for both sellers and buyers to get more accurate pricing of the deals that they're actually doing. So if you look at European prices, for example, there's been a big, obviously with the collapse in energy prices over the past few years, there's been a big a gap in widening between the price of oil-linked contracts and gas-linked contracts. And there's examples of that in Europe where you've had long-term deals signed between places like Qatar and Poland, which are based off oil. And when you look at the gas price now, you're looking at a $3 or sometimes $4 divergence in price per MMBTU. So buyers are stuck with buying this very expensive oil-linked contracts when in reality the markets have evolved.
Yeah, and so I was going to ask you, how have the European buyers changed their behavior then, given these trends? Is there a different buying mechanism now that they're looking at executing?
Sure. Well, I think Europe has been, again, at the forefront in terms of being a bit more creative and a bit more flexible in how they're trying to price deals. And the reason Europe has been so successful is in part because of their European gas hubs.
Yeah.
So if you look at Europe, you've got NBP, the National Balance Point in the UK, TTF, Tidal Transfer Facility in the Netherlands. And those two liquid gas benchmarks allow buyers and sellers to get more accurate pricing of the gas that are being delivered into those ports. At the end of the day, gas should be priced off of gas, and LNG, of course, is just a means of transporting gas. So having those liquid benchmarks which allow both parties to get accurate pricing, a better hedging mechanism, more liquidity to tap into, I think allows them to look at NBP and TTF as a more effective pricing mechanism for doing deals.
Now we've seen LNG prices kind of converge globally.
Yeah.
Do you think there's going to be even more convergence for LNG pricing across the world?
Well, I think that's an interesting point. If you look at LNG, as I've said, it's just a way to transport gas from one place to the other. And traditionally, there's been significant price premiums to Asian LNG versus European LNG. You're looking at numbers going back in the mid-2010s, sort of 2011, 2014, so post-Fukushima. You're looking at Asian prices in the $15 to $18 per MMBTU region, almost more than double of what you're seeing in Europe. But as I say, the solution for higher prices is higher prices. So with those higher prices, you had more cargoes going to Asia, which brought down the Asian price. And now you've got very much, in many cases, price parity between Europe and Asia. If you look at Feb 2016 numbers from somebody like Waterborne, it landed LNG prices. And for most Asian hubs, between $4.20, $4.40 per MMBTU, which is broadly in line with European prices. So to answer the question, going forward, obviously I can't predict the future. If I would, I'd be a very wealthy man. But I think it's fair to say that with a low oil price and a low gas price environment, with an oversupply of gas, which is clearly what's been going on in the space, there's every chance that as you have more gas-linked indexing, you'll tend to see more prices in a similar range.
Okay.
And I think that trend is probably going to continue.
Now at the Flame conference in Amsterdam, we heard a lot of people talking about the trend towards more spot LNG trading and short-term buying and selling. Do you think that's something that's going to continue?
Absolutely. I think that's a very interesting trend, and I think the precedent really is the oil market. You look at Brent in the 70s, primarily traded long-term contracts, and as you had this evolution of more effective pricing of Brent in the form of Brent indices by people like yourselves at Platts, it allows for more effective pricing, which then allows people to trade contracts on a more short-term basis because they know it can be priced more accurately.
Yeah.
So that trend I think will continue in the gas market, LNG market. If you look at sort of LNG spot trading, go back 2005, and it's roughly 8% of overall trade. According to some of the numbers we heard from experts during the Flame conference, in 2015 it's almost 30%. And a lot of that too is just the emergence of new buyers in the market. In 2015 you had new importers from places like Egypt, Poland, Pakistan, and Jordan. And when you look at the overall picture, you've got new buyers, new sellers in the form of Australia and the US, and all that stuff is looking for a home. And I think with spot trading and the ability to price it more effectively, off gas indices, the two go hand in hand. So I think you'll see a continued spot trading, absolutely.
You made an interesting point about US LNG, and certainly that was a hot topic at the Flame conference. How much of an impact do you think American LNG will have on global gas markets?
It's going to have a huge impact, absolutely huge. And it's not just the quantity of LNG that could come out of the US. I mean, they're talking about the US being the third largest exporter in the next 3 to 5 years. It's not just the quantity, but it's the way in which US contracts are structured. So if you look at the US exports, they've really been at the forefront of flexible contract structure. What I mean by that is instead of the standard destination ex-ship way of delivering gas, LNG, you've got FOB, you've got LTA type of agreements, which gives buyers the ultimate flexibility to figure out what works best for them. You couple that with the ability to price LNG off of, in the case of US, they're doing primarily off of Henry Hub, so again, it's linked to gas indices. You've got an effective way of delivering it and an effective way of pricing it. And if you look at what's happened so far in 2016, I think the US has exported 6 or 7 cargoes. They've gone everywhere. Cargoes to India, cargoes to Kuwait, cargoes to Brazil, and of course the first cargo that went to Europe earlier in April, which was the Creole Spirit, end of April really. And that contract actually incidentally was done on a spot basis. So when that cargo was loaded and went on a ship, it did not have a buyer. It was negotiated en route, and it was a truly spot contract.
Wow, okay. Now, the US is not the only country that's ramping up its LNG exports. Of course, there's Australia too.
Absolutely.
What do you think is going to happen for Qatar in all of this? Because they're the traditional LNG exporter.
Sure.
With competition from the West and East now, do you think there's going to be an impact on Qatari exports?
Absolutely. I think, again, Australia is an interesting example. In 2015, they were the second largest producer, largest exporter, up 25% year on year. They've got something like 50 million tons of capacity coming online over the next couple of years. Estimates are by 2018, 2020, Australia will be the largest exporter ahead of Qatar. And that product tends to go to Asia, both in terms of proximity. Australia obviously is very close to Asian countries. Japan continues to import significantly from Australia, South Korea, Taiwan. So it puts Qatar in an interesting position because they've got all of this LNG and they're getting squeezed, as you said, from low-cost production in the West and proximity to their buyers in the East. There's still going to be markets for this. And whether that's European markets, which is traditionally where these cargoes tend to go, whether it's some of these new markets in Egypt and Poland and Pakistan, etc., they will start to go other places as well, but they're going to find a lot more competition from Australia in their natural home market of Asia.
And just lastly, Aaron, if you can just mention something about how you view LNG markets going forward, if you've got all this oversupply from the US, from Australia, and Qatar still supplying, where is it all going to go? Who's going to absorb it? Where's the big market for LNG going forward?
Sure. Well, I think it's the combination of emerging markets and your traditional markets. And if you look at Europe as a traditional market, I think there's lots of examples where they could be the buyer of last resort. And what I mean by that is you've got in Europe liquid gas hubs. There's great interconnectors between the ability for that gas to be moved around to where it's needed. You've got storage facilities, and you've got financial hubs where you can price and trade that and hedge that effectively. You look at the emerging markets, whether it's India, whether it's Pakistan, whether it's Poland, etc. There's lots of places where there's going to have a need for that. And then the overall macro trend of coal to gas conversion, which will still continue. Yeah. Whether it's because of a COP21 objectives or whether it's just the general trend of trying to de-coal their economies, you'll continue to see more gas going to places. So although we're in a very well-supplied environment, there's still going to be a need and a demand for gas.
Okay, well, thanks very much, Aaron. It's a pleasure.
Thank you.